Hello traders, my name is Grigor and welcome to the market update. In this video we will check the dollar index, euro dollar, S&P 500 and crude oil. On dollar index, as you know, we are bearish for this free wave decline in wave C. Now we are still trading in wave B. Notice that price action very slow, very choppy for the past 5 months. This is clearly characteristics of a counter trend movement, so I'm confident this is wave B and that we will see a break lower. On this daily chart we are tracking a triangle. Notice that I already labeled end of wave E here, and the reason is why I labeled this or why I'm looking for a possible end of wave E here is on the 1 hour chart. I will show you this wave count later, but before we may completely be sure that this market is headed lower, we of course need aggressive impulsive sell-off with a daily close below this trend line, which is connected from September lows. Okay, so only daily close beneath this trend line will confirm further weakness in this wave C, okay, possibly towards 77 mark. Okay, now here is our 4 hour chart. Notice that I labeled end of a wave E here, this red wave E, and interesting is that wave E, which is part of a triangle, can also be itself a triangle. Okay, this was wave A, wave B, wave C, wave D, and wave E. Usually E waves will form a zigzag. Okay, but zigzag is a corrective movement, and I label this as a triangle, which is also a corrective movement. Okay, so basically bias are the same. We are looking now for an end of a wave E here, which could complete the wave B point at just above 80 mark, but notice that this fall from this start point is still not in 5 waves. Okay, it could be underway, but it's still not the case, so we need to be very patient here. But if we will see a 5 wave extension lower through this lower support line, okay, of this base channel, then I will be quite confident that wave E completed larger wave B triangle at this point. Okay, but as long the market don't make a 5 wave fall, we of course cannot confirm end of a wave B right here. Okay, which is here. So I will also now present you a new wave count that could be the case. So let me. Okay, this is our wave count that we are tracking right now, but this could also be, I will make this real quick, this could also be wave B, actually complex wave B. I will remove these letters, and wave E could still be underway. Okay, now so this is actually my second wave count. Just a second. Okay, so if we see a push higher, then I will probably look for even higher levels in wave C. If we see a push higher through this 79.86 level, then this wave count would of course be invalidated. In such case, I think that we will see another push higher in wave C before market will reverse to the downside. So for now we still cannot confirm this wave E, but if fall will unfold impulsively, and if we will see a break and a daily close beneath this trend line, then of course we will be sure that market is headed lower in wave C. But for now we are tracking still 2 wave counts, this wave count, which is our alternate count, and this wave count, which is our primary wave count, but we still need to see 5 wave decline before we may call end of a wave B right here. Okay, and now let's take a look also on the euro dollar. So if Dollar index is headed lower, then we know that euro dollar will be headed much higher. Here is our weekly chart. We are tracking this rally of wave E of a wave B triangle towards 138, possibly even above 1.4 in this year. On a daily chart, we of course are looking straight up here, and as I said, the reason is dollar index. Dollar index still did not move lower, while euro dollar is trading at its highs. So obviously, if dollar index weakness will accelerate, dollar will accelerate to the upside. So of course we are looking higher here as long as the market is trading above this swing low support at 1.3550. Okay, and now let's take a look also on the S&P 500. On the S&P 500 daily chart, we are looking higher here in wave C, which should be subdivided by 5 legs. This wave C could reach new all-time highs. On this 4-hour chart, we can see that the price is approaching some significant Fibonacci resistance levels just above 15 mark. So maybe we'll see a pullback from here, but before that I think that we will see another push higher in wave 1, because on this 1-hour chart, notice that the price is trading sideways here for the past few sessions, and I think this is part of a wave C, which could even be a triangle if not a flat. Okay, as you know, our primary view is a flat, which means we could see a test of 1490 level before we see a break into a wave 5. However, I can also see possibility of triangle formation here, as long as we have these higher highs and higher lows from these levels. But in either case, I think we will see a push higher above 15 mark. And now let's take a look also on crude oil. Oil prices are trading higher for some time now, and it seems that this wave B triangle is already in place here, and the reason why I think so, it's this daily chart where we have seen an extensions higher after a break of this base channel. The base channel is where you connect start point of wave 1, which was here, then end point of wave 2, which was here, and put a parallel line at the top of a wave 1. When you see a break out of this channel, then you will typically see an increase in volume and momentum, which usually occurs in wave 3. That's why I see then an extensions higher within impulsive structure. So I suspect that this is our wave 3 movement, and if this is wave 3, then we know that we are in a new 5-wave rally. So if we are in a 5-wave rally, then this impulse will be a strong indication that this wave E has finished here and completed wave B, and that we are headed higher in larger impulsive sequence in this wave C. Okay, so for now we are bullish, and we will focus for much higher levels as long as the market is trading above 89.68. Okay, why? Because we know that when wave 4 pullback will occur, then of course we do not want to see any deep retracement back to the territory of a wave 1, because otherwise our impulsive wave count would be invalidated. Okay, the market is now testing 261.8% extensions measured of this wave 2. This is a very typical target, or I should say reversal zone, for this wave 3, so don't be surprised if we will see a pullback lower. And we can also count 5 waves within this wave 3, so of course we could see a retracement. On 4-hour technical chart, I can also see some signs of a divergence here, so maybe we are approaching the end of current bull market. But as I said, any pullback should prove corrective, because this will be wave 4 before we see a new break higher. Okay traders, that's it for now. Have a good day. Bye.